All right, sorry I'm late. I should be live right now. I have no idea how this is going to go, and I don't want to commit to doing these regularly. But first is, if you don't know who I am, my name is Barry Horse on the internet. Probably most known through my following for beating football and baseball markets. Lesser known, I was a pretty active Bitcoin core developer for 4 years from 2015 to 2018, and have a background educationally in computer science. I'm making this video because I've received a lot of questions, well, throughout my whole life, but especially up to, through, and since the inauguration of Trump, about all kinds of different questions about Bitcoin price action, expectations for the rest of the year, the seemingly normal 4-year cyclical nature of Bitcoin price action. And all of these questions are basically illustrating to me a pretty complete misunderstanding of all of this that I don't blame anybody for, but most analysis seems to be coming down to some version of calculating the EV, or expected value, of Bitcoin as an investment, as if there's some chance of failure, and assigning probabilities to, there's a 2% chance that this could go to $200 trillion. In that case, even if there's a 98% chance of zero, it's a positive expected value bet, or some variation of analyzing this as if it's a sports bet or poker hand. And think it would probably be helpful to offer some perspectives more from an Austrian lens on how not random any of the last 16 years have been, and how I strongly believe that Bitcoin is the instrument showing us a new way to analyze human action around what really is the first digital scarcity ever, and in all likelihood, I won't go full maxi of saying the last, but within reason, the only one we'll see for a few thousand years. And that sounds preposterous to a lot of people, but I really believe it's on the order of something like the geocentric model of our solar system, in hindsight, being basically some pseudoscience, pseudo-religion guessing game of randomness and opinions that transformed greatly once we had the telescope and Copernicus could understand things better, and originally presented this heliocentric model of things that was laughed at and called absurd, but really redefined the science of the situation. And you sort of have pre and post telescope science, or astrophysics, however you want to call it, in the same way like naval navigation before and after John Harrison's clock to determine longitude was basically some type of pseudo-religion, pseudo-science guessing game before and after John Harrison. I strongly believe that basically all of economics has been some type of pseudoscience guessing game of capital misallocation and weak monies pre and post Bitcoin. And so when I start talking about these things, it's pretty important for me to say, unfortunately or fortunately, Bitcoin was invented or discovered, based on your perspective, after the English language. and very likely had to have occurred in that order. And so frankly, I don't believe English language is like perfectly built to communicate everything I'm going to attempt to today. There's all sorts of words like scarcity, asset, property, money. And we invented all of these things before we knew what Bitcoin was. We've never seen anything like it. I really believe it's teaching us a new way of analyzing things and human action since we've seen it. But to be honest, there's going to be situations here where there aren't perfect words to describe it, and you're talking to an engineer and not a communication student. So I'm going to try my best. I guess I put in the title the difference between risk and volatility, which seems to be an incredibly misunderstood topic. The reason I want to make this video is I've given an example lots of times about diversification that I can hear people getting really fired up and triggered about when I go over, but want to start with that to just basically introduce money as an engineering problem and not some pseudo-religion, pseudo-science guessing game of opinions like economics has basically been for the 100,000 years before Bitcoin. And that I really believe this is the singularity where math and science has been appropriately applied to the field. But my example typically of why I reasonably only hold Bitcoin and why I don't believe that's risky or a bet or something I'm needing something to go on my way to break right to continue to go well, and that it's not random that Bitcoin has gone from $0 to $2 trillion in 16 years with zero marketing team or leadership or any budget. And that's not just likely to continue, but I basically believe it's derivable and axiomatic to explain why what's happened the last 16 years will continue to. I'm going to attempt to do that in this video. But the analogy I usually give around diversification is if you imagine me being tasked with, right now I live in Costa Rica, moving to Australia next week. My approach of moving myself, my girl, our dog, our furniture, all my belongings, and anything else that I care about would not be to tell my girl to get on a kayak, the dog to swim on her own in the ocean, put my stuff in some propeller plane. I don't know, maybe I put my watch on some wooden raft, and then I would step myself on the A380 just so I could hedge my bets and be diversified in case something went wrong. There's a very obviously best engineered solution, and all of us are getting on the A380 to get to Australia because it's very obviously the best risk-adjusted solution to this engineering problem of moving these things across space. In Sailor's words, there is no second best. The kayak is not the second best option of taking the A380. There's one very obviously best solution. In the same way, Bitcoin is very obviously the best solution for transporting digital energy or money across time and space. And so I use that analogy a lot too, because it's sort of, I hope to kind of communicate to people why it's really poor to view this as a bet. Like, I'm guessing I see 75 people are watching this video right now. I'm guessing the vast majority of these 75 people have stepped foot and been on a flight on an airplane at some point in their life. I don't think any of us viewed that as some massive risky bet that gravity would continue to work the way we understand it, that aerodynamics would continue to work the way we understand it, that the game theory of the hiring process of these companies putting in pilots and captains on these planes that we've never met before and don't pre-screen or interview or do any questioning of beforehand will continue to play out the way we understand it. And that's another thing. I strongly believe John von Neumann's probably one of the 10 smartest people maybe to ever live, but definitely of the last 100 years. I really wish he called it something other than game theory, because I think when people hear the phrase game theory, they hear game, it sounds like children bouncing a ball around, or theory sounds like some like unsupported hypothesis of some guessing game that isn't as rigidly rooted in truth and science and certainty as it is and as it has played out in nature. And so my hope is to, and I know none of this video is going to replicate or replace what probably needs to end up being around 100+ hours of research on the topic. I would hope to just hopefully be able to accelerate anybody's research on these topics to sort of frame the way to think about all of this. But the number one thing that I hear that is just a complete misunderstanding of things is conflating risk and volatility. Risk is the probability of permanent capital loss, and that absolutely exists in basically every asset other than Bitcoin. And it's not a joke or a meme or me stretching the truth when I say Bitcoin is money and everything else is credit. Every other asset in the world that humans think they own or believe to have a relationship through property rights of owning is all done at the pleasure or benefit of some other party. So owning a house in some nation state relies on A, no natural disasters like the fires of the last month in Los Angeles happening. B, the country it's in winning every single war that it's a part of as long as you're alive or care about the property. C, just natural random decay and chaos of the universe. B or D, I'll keep going. You can name 100 of these, but the nation state that it's in not suddenly increasing property tax from 2 to 4%, which, by the way, the 2% property tax is already giving the property something like a half-life of 35 years to begin with, and decaying what's stored in it. And so I'm not anti-real estate. I'm not a real estate bear whatsoever. Obviously, I'm not going to make this video about explaining why the dollar will be devalued for the rest of time. I'm incredibly bullish real estate dollar pair, obviously. But in terms of why Bitcoin is a significantly better, I'm not going to use the word bet, but store than real estate, I really believe it's derivable. And that humans have never seen or interacted with a scarcity. So any pre-Bitcoin economics trying to guess how this will play out is based on zero empiricism, obviously. A 16-year sample size is not sufficient. And so I really believe you have to use epistemology or praxeology and think through and intuit why it's basically inarguable that the strongest asset will always win. But that's not a fluke. And we do have 100,000 years of history showing us that the stronger money will always outcompete the weaker one. And so I really don't believe this is arguable. I think most people get stuck on this because they haven't done the work to understand why Bitcoin is the strongest, that another Bitcoin cannot be created out of thin air. And that while I call it risk-free, and I could already hear bears and Keynesians freaking out, calling me an idiot to call Bitcoin risk-free because they see a jagged, choppy price action price if they're not looking in log scale and zooming in on timeframes like 1 day and 1 week, or God forbid, even less, where it is some random walk for long periods of time. That's a conflation of risk and volatility. But the counterparty risk of Bitcoin at this point in 2025 is frankly nothing other than the laws of physics continue to working the way they have that for 14 billion years. It's very arguable where that date happened, where the egg got so scrambled it couldn't be unscrambled, where the toothpaste got put out of the tube that it couldn't go back in. I would definitely argue basically post August 2017 and the New York agreement of the soft fork of the fork wars, that was basically, to me at least, evidence enough of the robustness of node runners and users, how controlled this market is by them and the network is by them, to basically make that a true statement. Bitcoin obviously was capturable in its first and second year. Where's the line? I would probably draw, I mean, potentially as early as when mining became dominant from ASICs, post GPUs, post FPGAs. I think at that point, it's pretty clear that maybe there is some probability of capture, but I think we have enough evidence by now that post August 2017, there's almost zero probability of capture. There's certain risks I could go over of not network dysfunction, depending on what you mean by dysfunction, but what's the right word? Like, it's on the tip of my tongue, just inconveniences in using the network, but of no real threat of integrity of your UTXOs being compromised or your share of the 21 billion Bitcoin changing whatsoever. And so all other assets are weaker and will in time decay from the chaos of entropy as time passes. I'm not going to attempt to explain the second law of thermodynamics on this podcast. Honestly, 90% of physicists, I don't think understand it very well. But basically, of the, let's call it quadrillion dollars of stuff or wealth in the world today, Bitcoin currently secures around $2 trillion worth, or about 0.2%. The other 99.8% suffers some version of entropic lapse on an annual basis. And part of what's leading me to talk about and use some of this podcast or live stream, whatever you want to call this, is drawing from a podcast I strongly recommend that I've posted several times already, of Michael Saylor with the inventor of Quest bars. I don't want to say his last name wrong, but his first name is Tom. The name of the podcast is Impact Theory. Probably 20 or 30 minutes into the podcast, he has an awesome metaphor about Bitcoin as a waterfall, that it hasn't been some fluke or random flow of capital for $0 to $2 trillion to have flown into this asset over the last 16 years. And that it's not fluky, that this is going to continue, that you don't have to put strings attached. And that, frankly, for the last 10 years I've been involved with this, I've given basically, it's crazy to say this out loud, but like basically the wrong answer and the like kind of fake, overly humble, incorrect answer to loved ones and friends who would listen, so that I sound like less of a maniac when I say Bitcoin is risk-free, and would say something along the lines of only invest what you can afford to lose. When in reality, the correct way to phrase this, and what I'm kind of done going the fake, incorrect, humble route, and I'm just going to start saying the correct thing, is only invest what you can't afford to lose. And that of any other people in here who I'm kind of preaching to the choir to, I would urge people to consider framing things in that way to people, because it's just correct. And we're at a point now at $2 trillion where, yeah, do we all know this is going to somewhere in 2025 terms on the order of 200 to 300 trillion? And is there plenty of upside? Yes, but we're at the stage where I'm tired of just getting ignored by people, or people thinking that some 2% allocation is the right way. Like, no airline would say, only step on this flight if you don't have to actually arrive at your destination. Only step on this flight with 2% of your body, like clip off your toenail and put that on the flight if you're only willing to lose that. Bitcoin is the solution to our problem, just like airplanes were the solution to a problem. And we're obviously in this weird stage of a decade or two where, the Overton window didn't quite come for the airlines for a couple decades after the Wright brothers, and you'd have all kinds of people, military personnel, misunderstanding its implications. You'd have people like General Ferdinand Foch saying airplanes are cool toys, but of zero military importance, less than 20 years before completely redefining the Second World War. And so that kind of brings us to the second topic of volatility, and why that's different from risk, why volatility is a good thing, why it's a gift to anybody who does do the work to understand Bitcoin, and why no coiners or skeptics or deniers who think there's no way Bitcoin's risk-free, there's no such thing as a free lunch, are in a way correct. The price you pay for reaping the benefits of this is enduring the unpredictable, volatile nature of the US dollar exchange rate of Bitcoin, and understanding that it has zero influence on the risk of capital loss or the function of the network, that Bitcoin is unbreakable scientifically. And so, yeah, by logic, like, if everything was so obvious, obviously everybody would do it. If everybody understood everything I'm saying on this call, obviously Bitcoin's market cap would be 200 to 300 trillion, and the price would be there. The reason we're able to still buy Bitcoin and accumulate Bitcoins in the range of $100,000 today is that there is volatility, is that volatility has scared off people from putting in the hundreds of hours of work to understand how this protocol works. And I strongly urge anybody to embrace that volatility as the gift and the entire reason this is there. It's fairly similar in the context of sports betting, who I know a lot of people follow me, is, in a way, you get paid to endure the losing streaks. Like, the reason I can gamble for a living is because I do have losing streaks. If losing weeks and even losing months were mathematically avoidable at scale and at size for anybody, that would obviously be attracting BlackRock, Point72, who, all kinds of wealth managers and hedge funds, if it was so obviously easy to endure, and all of the edges that are left for, mid-curve people like myself and all of us who are grinding this to still find edges and be able to win on stuff, is because volatility does exist. And so that's a gift. It's completely unreasonable to think that the first digital scarcity, and within reason the last, at least for the next 1,000 years or so, would be well understood by 8 billion people within the first decade, and that many people would need the Overton window to shift, and that they would be relying on the majority kind of maturing like most S-curves and most growths in technology, sort of like the internet, and that it was unreasonable to think that in the 1970s and 1980s, normal everyday people Like my mother, for example, would be doing the hardcore research to understand how TCP/IP works, what TCP/IP even stands for, what are packets, how are routers work, like what is the core infrastructure of the internet, what's the science behind this, electricity, Maxwell Boltzmann distributions, Michael Faraday, like learning how all of this works is not going to happen on day one for everybody. And those who do go through the work will be most rewarded for having done it. But it's unreasonable to think that the path from 0 to 200 or $300 trillion in the span of what will likely be 3 to 4 decades was going to be some straight line well understood by everybody and never have any cycles of greed and hype that get over levered and wiped out by degeneracy and idiocy. And so I guess bringing it back to like the certainty and risk topic, and Saylor's waterfall example, which again, you should go watch out the podcast after this, is just basically understanding the flow of capital, of digital energy, of money from higher energy states to lower ones, in the same way that if somebody didn't understand chemistry or physics or how the world worked, and in Saylor's example, on a hike, stumbled across a big, giant, beautiful pond, call it 500 trillion gallons of water in the pond, with some waterfall flowing down into it, and saying, wow, that's like really powerful. We can start building power generators off of this waterfall and build dams around this. And the person not understand the science of the situation, saying that's a really big risky bet. How do you know the water is going to keep falling? What if it flips to start falling upwards? And look at that waterfall. It's super volatile. It's very turbulent. That's not going down in a straight, calm line. And somebody understanding the situation realizes that it, at least for the next several thousand years, seems very reasonable that water will continue to evaporate into clouds, come over, rain, fall down the hill, down the waterfall, and into the pond for, you know, the vast foreseeable future, as it has worked for the last 14 billion years. And I really don't believe that it's much of a metaphor. I actually think that it can be derived that the actual usable scarce asset that our species has, which is one, has only ever been one, and within reason will be the only one for the next several hundred, if not thousands of years, would be the one capturing all excess flowing capital as the lowest energy state because it secures things. So yeah, to be honest, I'm losing a bit of my train of thought. I think I've explained most of my points around the diversification example, and the difference between volatility and risk. I'm going to talk a little bit about 2025, but I wanted to start explaining that around before I do anything about like price today, price tomorrow, price next month. It's illegal / impossible for me to give good speculations on Japanese and Chinese central bank interest policies and interest rates, on what's going to happen at FOMC tomorrow, on what a lot of factors which matter a lot for this, how they'll all play out. But the long and short of it is, in the long run, the only answer is Bitcoin. Of course, like, I accumulate more Bitcoin through identifying edges and mispricing around events like what I just named and listed. And when there is an obvious home run, unbelievable risk reward plus EV trade around this information, I obviously enact on that to acquire more Bitcoin for myself and my family. And I don't think that it's a complete fool's errand to try and time things around the market. However, in the long run, I would never recommend anything other than, for the vast majority of people, just all in spot Bitcoin as being the risk-free rate, and anything outside of that being some form of gambling, whether that's real estate, equities, bonds, other fiat instruments, whatever, gold. So I'll probably at some point make a video on each of these specific things, probably a video on its own of why I don't own real estate, a video on its own of why I don't own gold or why Bitcoin's better than gold, a video on its own of why I don't own equities or why Bitcoin's better than equities, explaining my perspectives on these things. But I'll just focus 2025 on and views for this cycle and Bitcoin as just like a Bitcoin topic. The first is the difference between causation and correlation. And I believe people's misunderstanding of the 4-year halving cycles of Bitcoin. And I strongly believe, yes, of course, there's elements of like a natural cleansing of the system around the halving in Bitcoin. That's positive for price action. However, I don't believe it's the core instigator or driver of anything, and that it's complete random correlation that things have timed out the way they have for the last 16 years. And that I believe the causation of most of these seemingly 4-year repetitive cycles in Bitcoin price are due mostly to global liquidity that has coincided by happenstance to overlap around pretty similar timings with election cycles and the halving. And to me, it's a lot like in sports, somebody confusing a football team playing poorly or worse on the road than at home because it's a different grass style. Although that's a bad example because that happens sometimes, but because they're wearing the color white instead of their home blue uniforms. And that if that's what you thought was causing the dip in performance on the road, that you'd be misunderstanding what's actually happening, which is the crowd. And so if you had a season like 2020 with COVID, I believe you can look this up. I'm fairly confident if you blind bet all the road teams in NFL at Pinnacle at the close in 2020, I think they won. It might be like you devig yourself. I'm almost certain they outperformed home teams. I believe they won in the blind, which is, if you understand these markets, an extraordinarily strong outcome. And in the same way, if you misunderstood in baseball as the opposite, as crowd noise did matter and hadn't done the work beforehand to understand baseball home field and what it's derived from, that when there were no fans in 2020 in MLB and the market mistakenly thought that there would be a reduction in home field, that you could bet a majority home teams, and understanding that that's not where baseball home field is derived from, but there's other things that cause it. And on the same token, I think if you bet the home teams in the blind in 2020 MLB at Pinnacle, they won in the blind. I'm very confident that was actually a good season for me because of that. And so I believe that's happening with Bitcoin. If people just like blindly mouth breathing, looking at the halving, go long, and then, take profit 2.5 years later. In my opinion, all of this has been just tied to global liquidity, and Bitcoin's always going to repetitively be the best sponge on this because it is the scarcest and best asset. And like I said, I can't make sound or helpful predictions around like short time frame Fed decisions. That's illegal and impossible for me to do. But one thing I can say that I am as confident, if not more confident than anything I've been in my career, is that I'm uncertain of the path and how it's going to get there. But all I know is that any potential dollar strengthening activities that would happen in the short term, call it the next 1 to 3 months, would, unless the leaders of the world wanted complete and utter global pandemonium and chaos, they've pretty clearly set the precedent of quantitative easing at these times and how things would come out of this. And I don't believe there's any liquid usable asset that will respond more positively in an outcome like that than Bitcoin. So it's certainly possible we diagonally chop up and to the right forever. I would not consider that a base case. I saw some comment already about the Arthur Hayes article. I definitely don't agree with all of that. I strongly do not encourage anybody ever owning any shitcoin or staking shitcoin on chain for anything. I speculate on these with some counterparty risk on Binance through futures. Of course, there's some counterparty risk with that. That's the only reason leverage exists, or that I use it, is simply to reduce counterparty risk so that the margin required to create these positions is less than, posting up everything I need to create them on Binance. But I view the protocol risk of storing anything on any of these shitcoin yield systems as being completely just like picking up pennies in front of the train when you understand where Bitcoin is going, and would view the only things as being either long all-in spot Bitcoin or some variation of hedged short on futures where you can also collect funding rate. But I don't currently see things the same way of it being quite as plus EV as he does in his article for, call it, the next 1 to 3 months. I'd be more interested in being riskier on some outcome like that when it becomes obvious how the global financial system will respond to it. So I have no calls, predictions, or anything useful to say about any potential systemic recession or anything in the world or the US, anything like that for the rest of the year. But I would have really high conviction that anything like that happening would be met with pretty rapid money printing and basically a repeat of what we saw the second half of 2020 and beginning of 2021. Can you just tell us what you expect the price to happen instead of giving some big words and useless motivational stuff? Yeah. So guessing the timing is the same thing of somebody seeing obviously gravity works. It's a law that things fall, and not quite having the instrument to predict or measure that it will be 9.8 meters per second squared. I'd be speculating, obviously. I think the most conservative guess is that the rest of the world probably realizes the things we're talking about on this call over the course of the next 2 to 3 decades, and Bitcoin monetizes something like 20 to 30% of that quadrillion number. So a $200 to $300 trillion market cap. Let's call it 200 to make the math easy. With 21 million Bitcoin, that would be in 2025 dollars, a $10 million Bitcoin. Obviously, at the time this happens, in real terms or nominal terms, they'll be significantly higher. So assuming something similar to M2 monetary supply increasing at about 8% a year, like it basically has, or just, basically mirroring the S&P 500, probably could look like something on the order of $100 million Bitcoin of something in the next, call it 30 years. But that's guessing on the turbulence around the waterfall and different unpredictable, uncontrollable factors like wind that would control the rate at which water could fall from the waterfall or would be rained down upon from the clouds, and all kinds of other entropic forces in the universe causing this to be an unpredictable thing. It's a little bit like Maxwell and Boltzmann distributions. Like, we know that this is the way it works, and all we can give you is a probability distribution for guessing. That's sort of the same way I would approach predicting Bitcoin price. But I do believe that Bitcoin is kind of the singularity of where for 100,000 years, economics has been some type of pseudoscience, pseudo-religion guessing game that has finally blended and molded in with physics and science and math to finally basically give our species a form of savings or capital or value store that we can shut our brain off, that we can understand that modern portfolio theory only exists because of weak money, because of capital misallocation, because it has the guessing game of finance has been this entropic mess of randomness pre-Bitcoin that hasn't made any sense, that has been some type of pseudo-religion, pseudoscience. Yeah, hopefully I explained myself. How do you balance the security of your stack and storing your security seeds and the ability to pass it on to loved ones in the event of an unexpected death when they don't understand BTC? Without getting too personal with my answer, so like the technical solution, if you cared about doing something like this, that you wanted like balancing security in your question, and you want to completely rule out any trust of any third party, I'll go over the trusted solutions in a bit. Bitcoin has multi-signature addresses. They also have something called a time lock address. So you can set something to send your UTXOs to an address on a certain block, like block height in the future, if they don't move beforehand. And so what you could do is just say on February 1st, the funds in this wallet get sent. Say you have 10 Bitcoin to your name. Say you have 5 family members you care about and you want each of them to get 2. Then on February 1st, 2026, the 10 Bitcoin, those UTXOs get dispersed as 2 to each of these 5 people if nothing happens. So obviously, if you died, then that would happen. And you would have to remember at some point before January 28th to move those UTXOs into a different address you control. The less technical but more trusted solution would be basically a solution like Unchained Capital. So if you just Google Unchained Capital inheritance planning, I'm sure their product will come up. They, among Bitcoiners, would probably be the most trusted solution for something like that. If Bitcoin appreciated at a perfect 60% ARR, people stupider than me, richer than me would own it all. Correct. I mean, I assume what you mean by perfect, because it has, depending on your phrasing, it has appreciated at a perfect 60% ARR. But I guess what you're meaning is on January 1st to December 31st, did it exactly go up 60%? Agreed, Jack. Good shirt, Mike. Thank you, buddy. That was a very good 2023 season due to them, namely. Do you have anything anywhere talking about where to buy and best way to store currently? Yeah, so for years, the only hardware signing device I've recommended anybody is the Cold Card, manufactured and sold by CoinKite. If you just Google Cold Card, I'm pretty sure it'll be obviously the first link. It should be the website should be something like coinkite.org or .com. I won't lie, there will be some level of technical competence to be able to use that. I believe it's an extremely good thing and very good in the learning process of how Bitcoin works and to learn about, like on-chain custody and really how the protocol works to start to use something like a Cold Card. But I will admit, if you're completely technically incompetent and don't even know what half the buttons on your computer do, I've never had another product to recommend until recently in the last year, an option called BitKey. So same thing. I think I'll check right now. Yeah, if you go to bitkey.world, that would be, no offense, what's your name? Stephen Molitaris. No offense, Stephen, but this would be like the idiot proof option. Extremely user-friendly and admittedly not like the 100th percentile level of security like Cold Card is, but significantly higher than any other hardware signing device from my perspective and super usable. Mason, I've purchased Trump coin at 27. Should I hold and sell when? I've lost over $50. I don't know how sarcastic that is, but I guess I'll explain like the best I can with perspectives on shitcoins. So I think people would understand this entire topic a lot better if they put the time to understand why all of the projects before Bitcoin failed. Things like Eagle, DigiCash, to understand why like a blockchain is not really the interesting technology here or what's going on. Blockchains have existed for over 50 years. They're not new, they're not innovation. This is not what makes Bitcoin special. What's happened is when Bitcoin was first monetized from $0 to first $100 and then $1,000, lots of people made, primarily like hardcore cypherpunk libertarians and drug dealers, made lots of money. Plenty of speculators and traders made lots during this time in like the 2011 to 2014 range. And as this happened, grifters and scammers started these affinity scams by basically forking Bitcoin into things like Filecoin, Purecoin, Dogecoin, Litecoin, that tweaked a few variables and explained we're better than Bitcoin because XYZ. All of them misunderstand why Bitcoin is valuable in the first place. And all of them are typically trying to implement some idiotic solution without a problem, so that they can grift and ride the coattails of this blockchain buzzword. And since Bitcoin went 0 to 100 or 0 to 1,000 or 0 to 10,000 and now 0 to 100,000, that we're next. And maybe you can't afford a whole Bitcoin, but we're going to scam and prey on you and your unit bias because you can only afford to buy 0.547 Bitcoin, but you can buy 10,000 Trump coins. What if Trump coin goes to 100,000? Then you're a gazillionaire. Obviously, none of us care about unit bias or anything. If all any of us wanted were units of some currency, then we would all not use US dollars. We would all store in Argentine pesos and Venezuelan bolivars and Turkish liras. We obviously don't because we understand they're weaker currencies. And so there were always, in the early days, versions of different shitcoin cycles, like Purecoin and Filecoin, Dogecoin, and Litecoin, like I mentioned. Stuff got really egregious, and this is probably why in my tweets you see such an anti-Ethereum tone, because I really believe it's set back our species. Truly believe, I mean, it's, I think, almost inarguably the biggest financial fraud of all time, and has really probably set back our species a decade. But stuff got really out of hand at the end of 2014, beginning of 2015, with something called Ethereum, which wanted to offer things called smart contracts, or what do they call them? The world computer, like these dumb marketing slogans by one of the biggest scammers in the world named Joe Lubin. And he found this autistic hyper nerd named Vitalik, who goes up on stage and does this performative autistic act of acting like he's smart, basically fooling everybody listening into believing these are using way bigger words than they understand. This Ethereum thing must be genius. It's Bitcoin, but better. All Bitcoin can do is send money from A to B. Ethereum lets you build things like unicorn and fart dust on the internet. Like, that's unbelievable. This is ground-changing, world-changing technology. This is what's next. And you get all these VC scammers coming in, running these pump and dump ICOs. And so basically the best I can explain how idiotic all of these are, I've given this example a lot before, but it's a lot like in the 1800s, somebody seeing Carl Benz beginning to engineer automobiles and saying, "Hey, Carl, I love these cars you're building. They're beautiful. I hate when it rains with my horse and buggy. Like, it goes right through the tarp. We get wet. The horses shit everywhere. Like, I'm tired of these things. This car's awesome. You get to paint it different colors. There's windshield wipers. Like, that's just brilliant. I love this thing." But that combustion engine in the middle of the car, it's really loud. I think it's polluting the environment. It looks really expensive. Like, I don't think we really need that. It's heavy. Why don't we just take these metal chassis of the car and strap those to horses? And it's completely missing what's happening. And it's a lot worse than that, because, from a computer science perspective, to use a blockchain to perform anything as your base data structure makes absolutely zero sense. It's a horrendous data structure, and there's a reason they're effectively unused for 50 years. Like, the only reason you would ever use a blockchain to do anything is if design-wise you were willing to make massive trade-offs in performance and scalability in order to completely utmost prioritize decentralization. Otherwise, you should just use SQL. Like, a blockchain is it's a fancy database. And the only reason you would ever use one is for Bitcoin. Like, there's one use case ever for a blockchain, and it's Bitcoin. To have some, of course, decentralization is a spectrum, but to have anything other than max decentralization, your complete and utmost engineering design goal, and to use a blockchain is like, these people are too smart, involved in theory. Like, these are really like the most evil scum of the earth people. Like, they're not idiots. Most people in crypto and shitcoins, they're idiots. They're just ignorant and don't know how idiotic what they're showing is. And they're just following the next wave, trying to make money or whatever. But these Ethereum people really are like the dirtiest, scummiest humans in finance. Like, they're just scum. They absolutely know what they're doing. And it's just really disgusting. So, that's a long way for me to explain. Every single one of these is completely idiotic and going to zero in the long run, easily against Bitcoin. It's up to you to speculate on trades like Trump. Personally, the vast majority of my shitcoin trades are shorts. So I've been extremely short Melania since inauguration. I absolutely do not at all recommend anybody spot holding any shitcoin for any period of time ever, like truly never. Of course, I'll be long certain shitcoins in certain excessive liquidity environments. So, like, for example, if there is some sort of mini recession and the money printer starts going on turbo mode again, unfortunately, it's quite likely that most of these speculative shitcoins will probably outperform Bitcoin over short time frames. And so in an attempt to get more Bitcoin, I'll be trading that in the form of longs on different shitcoins. But until that happens, I'm not making predictions of that. I'm just prepared with different plans if those opportunities present themselves, and hope and plan to capitalize on them if they do. But I react. I don't predict. I have a question about not from Josh about not making the baseball cut last year. Yeah, so baseball went really well last year. I'm just growing this very deliberately and slowly. I just want to, put one foot in front of the other and walk before I run on all of this. So I know the number now that works. I think it's logical and safe to allow some new people this year, but the next 2 months, please stay tuned to Telegram, Twitter, whatever. I'll definitely be making different messages about people it could make sense for. And I think there will be room probably for a couple more spots this year, but would definitely expect them to be scarce. Do you have concerns with Trezor or Ledger? Yeah, like when in doubt, there's just zero reason to be trusting either of these like shitcoin oriented companies. Like they're just screaming at the top of their lungs. They're not max allocating resources towards securing things for Bitcoin. So I just don't see the point. There's obviously been some security breaches with Ledger. They've made highly questionable management decisions the last 2 or 3 years. Back in 2017, I think I still have like different Ledger products. I've obviously never had any security issues with them. However, when you have such a vastly superior, clearly better option like a cold card, I would wholeheartedly recommend that to anybody. And yeah, don't really frankly have good things to say about anybody dedicating the resources they do. Obviously, I'm a capitalist as well. Like they see an opportunity clearly and want to run their business that way. I believe the long-term capitalist better solution is to just stay focused on Bitcoin. And that I really believe will end up benefiting Cold Card and NVK and CoinKite in the next decade, but time will tell. Why can there only be one Bitcoin? This is a great question. This is what I meant to talk about during this. Why couldn't they just copy the code and make another network with 21 million Bitcoins? Nothing's stopping anybody from doing that. They can. Please go research something called Bitcoin Cash. Please go research something called Litecoin. Please go research something called Dogecoin. Please go research something called Bitcoin Satoshi's Vision. All of these are Bitcoin forks. They've taken the source code of Bitcoin and started their own. What makes Bitcoin special is it is a truly globally decentralized system enforced by 200,000 religiously convicted node runners, defended by 20 gigawatts of power, and coming up on about 1 zettahash per second of hash rate. To build a proof of work system that robust, that physically distributed, and that physically strong is the most unreasonable thing in the world to think could happen without some centralized marketing budget on the order of trillions of dollars. You could take all of the Google, Microsoft, Facebook, Twitter, whatever servers on the planet right now and immediately start direct all of them towards SHA-2 mining. You'd end up with something on the order of like 3 to 5 exahash. So you would need something on the order of like 30 Earths, like all of the computers on Earth immediately start mining Bitcoin. You would need something like 30 Earths to start mining and have a 50-50 chance at mining one block for 10 minutes, then losing the next one and having all of that work and energy completely wasted. Bitcoin's secure because its hardware is specially purposed. That's why at the beginning I brought up the toothpaste being out of the tube. In my opinion, like I went all in 2015. Like I think the last dollar I ever owned was June 2016. And it's arguable. I would listen to somebody who told me I over-risked to do that. Obviously, age adjusted, it was probably a good decision. But like, there's a chance. I'd be open-minded to somebody telling me that there's a chance things could have gone wrong from then. I really don't believe it. I kind of think, like I said, post ASIC mining, the toothpaste has been out of the tube, and this has been not a bet or a risk since then. But nothing, basically, what's your name? Buckeye6. Buckeye6, nothing is stopping anybody from making another Bitcoin. The free market will very obviously continue to choose the strong one. So it's basically the same question as what's stopping somebody from starting a new English language? Like we have, well, not 8 billion, but I don't know how many English speakers there are in the world. 2 billion? I'm guessing that sounds like a good guess. There's 2 billion English speakers in the world. And we're just going to say no more of that. Like we're done. English isn't good. It doesn't achieve what we want it to. we're going to start this new language where we just shout these random incoherent sounds and you just have to guess what each of them mean. And it's going to be like, hardly blah, 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 some garbled nonsense. And we're not going to have a dictionary. Like, we're just trust us. This is a better communication protocol. Like, just trust us. Start using that. If you want to use the word bet, that I'm betting on that not being adopted, maybe. But it's a lot like, what's stopping somebody from changing the rules of chess? Like, you can start a new game. You can call it chess if you want. I think chess has, I don't know a lot about the history of chess. I'm guessing it's thousands of years old. It seems like a game that would be thousands of years old. However old chess is, like, I'm guessing that overnight, if the US government just said, no, the game of chess, we're not a big fan of it, we're going to start this thing called USA chess. And all you do is you start with 2 rows of pawns, and instead of moving 1 or 2 spaces, they actually go 3 or 4. And there is no king. You just kind of guess a random winner at the end, or you just trust us. We pick the winner. We're the US. In USA chess, we just pick whoever we want to win at the end, and you guys can just move your pawns 3 spaces instead of 4. Isn't that so fun? Like, you guys should love this new chess game. Like, go enjoy it. If you want to say, I'll bet on the free market not adopting that as the new chess, and that we'll continue to play chess. So nothing. But to outcompete Bitcoin, or to be a superior or more secure or superior proof of work network, that would require you building out in excess of 20 gigawatts of power. That's not really the securing factor. The Three Gorges Dam in China alone is more than that. The key part is the zettahash of hash rate that cannot, like, I don't think a lot of people listening to this call probably pay super close attention to the hardware restraints around Bitcoin mining right now. But like, even building out like 100,000 new ASICs right now is not a trivial thing to manufacture. Like, there's already a shortage of them. What you would need to do is effectively completely capture. I mean, it's just so delusional. Like, I think you'd need more than $2 quadrillion, honestly. I think you need more than all the money in the world to afford this. You would you would need to halt all manufacturing of all the ASICs for the rest of time, buy all the current ASICs. Actually, this won't even work, because if it did, then every Bitcoin user in the world would just fork over to SHA-5 or some new hash function. But what you would need to do is do all this in secret. You'd need to basically find some way to outcompete TSMC and Bitmain and Canon and all these people to build your own ASICs. You would then need to find a way to build out a facility, geographically distribute it, get it in the hands of non-centralized parties, build up like at least a 2 zettahash network. It would need to be at least the same efficiency of current modern Bitcoin miners. And you would need to do all of that without a marketing budget, because like I said, the second that happens, you will become a centralized entity. Like, the key part of Bitcoin is that it was fairly launched. There's no pre-mined shitcoin of any like insiders getting things first. Bitcoin has won and clearly proven itself to be the #1 proof of work network, because it was a fairly and ethically launched protocol for anybody in the world to access. Anybody could mine on their laptop for a span of 2 or 3 years while it was killable, and by some miracle was allowed to exist until, like I said, probably around 2013, 2014. And since then, I don't believe there's been like an inherent systemic risk to the functionality of this network. So, very good question, but why can there only be one Bitcoin? There can. I mean, again, go look at Bitcoin Cash. You can start your own version. I invite all of you to try, but like, I don't think enough people realize how much things were stacked in the favor of Bitcoin Cash. Like, maybe people haven't really researched the history of the fork wars, but like Jihan Wu and Roger Ver were 2 unbelievably influential Bitcoiners at the time. If you don't know Roger Ver, he's considered Bitcoin Jesus. He extremely early Bitcoin user to sell fireworks. Jihan Wu was in charge of Bitmain, who still is, but especially back then was basically the only manufacturer of ASICs at the time, controlling an unknown but extremely, like maybe close to a majority hash rate of the network. With complete and utter full support of Bitcoin Cash, and the user activated soft fork in August of 2017, clearly demonstrated like these people have no control. And I believe very obviously the market shouted at the top of its lungs that Bitcoin is the winner. Sir Horse, do we like Chiefs money line? I don't think so. I mean, if you go to my Telegram, I talk through a little bit of the math. I mean, the Chiefs could be, I mean, if I genuinely, if you wanted to call the Chiefs right now, like if they played 1,500 teams on all neutral fields, how many of those 1,000 games would they win with the level of effort and performance and health that we'll see in 2 weeks? How many of those 1,000 games would we win? Would they win? Sorry. If you told me they'd win 850 of them, or that they'd be an 850 team, I don't think you're delusional. Like, you could argue that, and I wouldn't think you're an idiot. In doing the math of the sport for the last decade and having immense respect for all of the money that's bet in these markets and how good the best teams of the year are almost always, I'm clearly not low on Kansas City. Like, I was high on them on their money lines the last 2 weeks. I've been pricing them as an 800 team and been high on them. So, like, maybe I was low. I honestly, I kind of think I might be fractionally low, but that's just kind of what I'm going to keep calling them. If that's what they are, I mean, I don't know why you wouldn't be too big of a fan of Philly. I mean, rosters wise, like them and Baltimore clearly lay over everyone. If you just look at like speed, size, weight, how good the players are at football. I've obviously been a very big fan of Jalen Hurts ever since Alabama, USC in 2016, basically his entire career. I think he's really good at winning. I think that's a skill. I don't think it's random that he's been a part of all winning teams his entire life. And really, like this year, you know, the 3 games they lost, one was he was out and they got Kenny Pickett for 50 minutes and they still were the right side on the field and probably the right side against the number in the game. 2 was the Tampa game. We were against them and the entire Philly team was out. I think half their offensive lineman was out. They were completely dead. And obviously we know that the Florida home fields in day games play up in September. That, you know, I think they were just drawing dead in that game. It's not really a lot to be ashamed of. And then the other one was Saquon dropping the game away, where Philly was easily the right side on the field and arguably the right side against the number in that game. So, like, they have an almost flawless record this year too. They're not like really a slouch at winning or losing. I think they're a pretty good team, but I'll just respect and keep them where the market's had them, and I've had them too, is around like a 765 team. If you have an 800 team versus 765 team on a perfectly neutral field, the game should be something around 120, Kansas City. So I don't see enough of a crazy handicap advantage to like really love it. And the level I would have to rate Kansas City at to make the game like 135 is, like I said, a number I would easily believe, but not one that I'm going to risk Bitcoins on, knowing like how much of a departure from math and the market that would have been. Like, I like Kansas City last week. I'm not really upgrading them off. Like, our job in doing this isn't to evaluate and tell people how good the teams were. It's to predict. And so like, that's kind of why I think Kansas City ended up being an edge in the market last week. I believe the market was evaluating the teams much more than predicting the teams. We have to skate where the puck is going. At the price last week, I believe they were being priced a lot closer to what they had demonstrated during the year, which was a good but record-wise overrated football team. At this price, they're sort of being priced where I've been expecting them to play to, that they demonstrated last week, and that was the edge. But I don't think there's much of like a hidden edge or secret in this current price that they're being undervalued. Mason, will the market react positively if rates fall or stay the same? I mean, the market's priced in 98% probability or more of no change in rates tomorrow. There's certain things during the press conference that could be said that could influence different sectors or specific things. I don't know what Powell's going to say. I'm just not positioned during it because you get like huge whipsaws of volatility and randomness that are just seem like a big crazy mess unless you have some crazy information, in which case go make $1 billion tomorrow. But I don't have the information. Chess is 1,500 years old. Thank you, Ryan C. I'm going to research chess later tonight. It's not football season really anymore. I can go on these weird Wikipedia deep dives. What will happen when all the Bitcoin are mined? Will it just keep rising forever? Yeah. So already we're basically financially at a point where there will be massive financial incentives for mining Bitcoin. But yeah, it'll work just like a small transaction fee. Well, not small. I mean, so I see I've already been doing this for an hour. I don't want to go too much into like Bitcoin scaling. That's its own video. But it's extraordinarily likely that in the next 10 years, I'll give one useful practical tip. That mining rewards or block subsidies become less than 50% of mining revenue, I would say by the next 10 years. I made a bold prediction that by the end of this epoch, like by the next halving, that we would see that as like 50-50 being like a regular occurrence. We're obviously nowhere near that. It's still very cheap and affordable to use main base chain Bitcoin. But there will very likely come a time that Bitcoin main chain, on-chain transactions become unaffordable for everyday purchases. Now, again, without going on a crazy tangent about inflation, I strongly believe that as the world begins using hard money, the deflationary benefits of technology will flow so much to all of us that it will be like, I have one of my nodes, an old node here. Like, I think this is a terabyte hard drive in this node. Like, the reason the fork wars played out the way they did is that to maintain Bitcoin's decentralization, it was critical that nodes become and stay relatively affordable for normal everyday people to use, so that hundreds of thousands of non-wealthy people can keep the network in check by running their own node. And by increasing block sizes, that would require, multi terabyte hard drives, which is at a certain point becomes expensive and unusable for everyday people. What's extraordinarily likely to happen as the world uses a Bitcoin standard is that multi terabyte hard drives become effectively the price of a penny. So like in the same way that even when I was just in high school, every year for math class, they made us pay some $50 or $60 or $75 big fancy Texas Instrument calculator that does all this calculus. And now it's just free on your phone, or you go to wolframalpha.com. These things will just trend towards zero. And at that time, I believe we actually will achieve on-chain scalability through bigger blocks. I don't want any like hardcore Bitcoin maxis to call me a big blocker, because I'm not. Obviously a very hardcore Bitcoiner throughout all the fork wars and everything. But I do think that's how things play out in on the order of something like 30 to 50 years. If they don't, obviously we have all kinds of different scaling layers like Lightning, but those are videos for a different day. But yeah, it's extraordinarily likely that transaction fees become very high in the next 10 years. The takeaway, if none of what I just said made sense, or I'm just talking in fairy tale land 50 years from now, is all of the UTXOs that you stack and accumulate, I would strongly recommend to consolidate into meaningful chunks. So the financial takeaway is, if you're doing something like a dollar cost averaging into Bitcoin, instead of doing something like buying $10 per day, it's significantly better to buy $70 per week. And frankly, it's probably even better to buy 140 every 2 weeks, and probably even a little better to buy $280 per month or $300 per month than $10 per day, because there will be lots of UTXOs on Bitcoin that basically become dust and unspendable on chain based on where transactions fees go. Tim Long joined a little late. If you haven't already discussed, do you have any thoughts on MSTR? So not financial advice, genuinely. I admire Michael Saylor as much or more than everybody alive. I would have as much or more conviction in him being a strong leader of a company than anybody else, but he is a human being. And so there are obvious risks with things like stocks. If it remains a US company, it will need the US most likely to win every single war it's a part of for the next 100 years, if that's your time horizon for MSTR. It will need the US to not impose unreasonable and destructive tax policies on corporations. It's a company run by humans who could all lose their minds and start going crazy. But in terms of like where I see the business headed and how, I want to say impossible, but let's just say extraordinarily unlikely there is to ever be competition at his scale or level, I really believe his analysis, which is MSTR MicroStrategy, is basically building the Standard Oil of, instead of liquid energy, digital energy. I think he is, I would assign a 95 to 99% probability that he will be the wealthiest man in the world in the next 15 years. I think he will be the first nominal trillionaire ever, like well above 90% of that too. And I think that MicroStrategy will be a multi-trillion-dollar company on the scale of like the Magnificent Seven right now. And it's obviously an $80 billion market. Like I think that's an above 50% chance outcome. In terms of correlation to BTC, I don't see a huge path towards the like MNAV MSTR premium on spot Bitcoin holdings ever maintaining some premium above 3x. There could certainly be like mania phases where it wicks up above 5 or 10x, but that would be self-rebalancing because Saylor would just be jamming the ATM and selling stock to buy more Bitcoin at that point. So that's sort of the upside. I do believe it's pretty tradable because of that. And I would be waiting and hoping for opportunities to buy MSTR at a lower premium to its Bitcoin holdings if I was going to accumulate it. Again, not financial advice, but ultimately me personally, I'm really only interested in spot Bitcoin because of the sovereignty and lack of risk. There's obviously risk in MSTR. There's obviously a higher upside that you get rewarded with because of that risk. And so if you have trapped or locked funds in some retirement account that you can't access or buy spot Bitcoin with, I would definitely prefer holding MSTR to things like IBIT or the Bitcoin ETFs. But again, not financial advice, and I definitely recommend everybody do their own research, starting with probably watching the Q3 earnings call from Saylor, like very early November last year or very late October. It's very good. I think Spagnuolo puts Hertz in a blender. Eagles could still win though. Yeah, I don't know. Anything could happen. We're all guessing. I think Hertz is intelligent and good at football. We'll see. All right. Well, this has been more than an hour. It's kind of more than I was budgeting. Started with some rambling thoughts and turned into some questions. But thank you to everybody who made it this far. And I hope everybody has a great night.